Welcome, everyone. I'll just wait for everybody. I don't mind you guys talking, but there is a bar downstairs as well if you want to carry the conversation over. I don't mind at all, but thank you all very much for being here for an official Australian Blockchain Week event. How exciting. Hundreds of speakers, not hundreds of events, but lots of events. Yeah, pretty exciting, and today is the best event, of course, where we're actually going to talk about how to use crypto and blockchain in everyday life. But before I kick things off, firstly, I would like to acknowledge the Gadigal people of the Eora Nation as the traditional custodians of the country we are meeting on today. We recognize their continuing connection to the land and waters, and thank them for the protection of this coastline and ecosystem since time immemorial. We pay our respects to elders past, present, and emerging, and extend respect to all First Nations people here today. Amen. Awesome. Next, I'd like to thank our sponsor, Independent Reserve. They're the ones who are throwing on the food and drinks, so thank you very much, Adrian and Independent Reserve. For all of you who don't know about Independent Reserve, they are a cryptocurrency exchange, so that's a place where you can buy and sell cryptocurrencies. They were established in 2013. They're trusted by 250,000 users and won Digital Currency Exchange of the Year from 2019 to 2021. If any of you want to try them out, there's a bunch of QR codes on posters around here, so feel free to download the app and give it a try. If you're watching this on YouTube, hello YouTube, you can find it in the description below. Smash that like button and hit subscribe as well. That's what all the cool kids say these days, right? All right, awesome. So next up, I'm going to introduce the panel to you. So firstly, we have Joe. Joe is the founder of Crypto Consulting Institute. CCI helps investors to enter the crypto market more safely by focusing on education. Next up, we have Adriana. Adriana is a community manager for the Algorand Foundation and also runs the Blockchain Pro podcast. She interviews people who work in the industry, not necessarily, the tech guys, but also like accountants, marketers, and everyone in between. So, because anybody can work in this industry. Next up, we have Adrian, the guy we have to thank for this event. He's the co-founder and CEO of Independent Reserve. Next up, we have Marley. Marley is a designer and illustrative artist and co-founder of Toy Factory. And Toy Factory is a collaboration between various artists who are creating awesome NFTs and other digital art. And last but not least, we have Mitch. Mitch is a crypto entrepreneur. He's helped people use their crypto wealth to buy watches, cars, and other luxury items. He also knows a thing or two about gaming on the blockchain. So welcome, everyone. All right, let's get on to tonight's proceedings, which is how crypto and the blockchain are used in everyday life. So I guess the first thing is I want to ask, how many of you have used the internet? Anybody here use the internet? Heard of it before? Yeah, there's a few of you. All right, that's pretty good. Now, when was the last time you had a conversation with somebody and they said, yeah, nah, I don't use the internet, don't know how the technology works, hey bro? Never, right? Everybody knows how the internet works. And, well, actually they don't know how the internet works, they know how the applications work. But if we were to go back 25 years ago, the majority of people heard about the internet, but they actually didn't use it. They maybe didn't know where to start. Maybe they thought it was too expensive to buy a computer, because back then, $2,000 was a lot of for a computer. In the 90s, it was a lot of money. Or maybe they didn't even see value in it. They had their typewriter, and they thought, this typewriter looks pretty good, works pretty good. I can still write letters. But here we are, and everybody in the room has used the internet. And people use the internet without knowing how the technology works. How do servers work? I don't know. The programs, I don't write them, so I couldn't tell you how they work. And so to my mind, at least, there will come a time when most of us will interact with crypto and the blockchain in the same way, right? At the moment, people talk about blockchain technology and crypto as like this abstract thing. And many are kind of scared away from it, right? Because they're like, oh, I don't know how the technology works. But if we fast forward to today and we think about the internet, we don't talk about the internet. We talk about the applications that we use, right? We use Google, we use Facebook, we buy on eBay and Amazon and things like that. So to my mind, in the future, we won't be talking about the blockchain or the cryptos and all that things. We'll be talking about the applications that we're using. So for example, you might be buying Bitcoin on independent reserve, for example, right? You might be uploading your NFTs to OpenSea. So instead of just talking things in abstract terms, we'll be more specific. Anyway, with that mega long intro out of the way, let's talk about how people use blockchain and the crypto today. And I want to start off with maybe talking about the simplest of concepts, and that is money. I think we've all interacted with money before, maybe paid for a drink or two, that sort of thing, yeah? Anybody used money before? Yeah, make some noise. Yeah, money. Yeah, money. All right. As some of you might have heard, El Salvador, which is a country, has made Bitcoin legal tender. So you can go to McDonald's, to your dry cleaner, and pay with Bitcoin over there. More recently, Ukraine has passed some laws as well to make crypto legal tender as well, with all the donations that are flooding in. So with that, I'm finally going to get to my first question. Oh, good. And that wasn't a question. Yeah, who's used here Bitcoin as money, and who can kind of talk about it? Joe, tell us about it.
Well, first and foremost, thanks everyone for taking the time to come out to this event. Before I answer that question, I've got a quick question for myself. Who does not own crypto in the room, out of interest?
Does not.
So everyone here owns crypto.
That is massive.
There you go. Interesting. So my first experience of using Bitcoin as a payment mechanism, actually spending it, was in I think it was at the end of 2016, start of 2017. And I took Caleb and Jeff, who was running Travel by Bit, out in Brisbane for lunch. And that lunch probably cost me about $500 in today's money. Cost me about $50 back then, max. So that was my first experience of using it as a payment, process. But Bitcoin isn't really seen as a payment system anymore. It's more seen as a store of value, which you're probably all aware of now. There's much better blockchains and operating speeds that can process transactions a lot quicker. And I know that's why Ripple kind of caught the scene and what it was supposedly for in the beginning anyway. So yeah, that was my first experience of spending it, and I gave a lot away at events I used to run as well over the years, trying to educate people, which it seemed a good idea at the time. So that's my experience really of spending it.
All right, awesome. Has anybody else got a story about how they spend crypto, where they spend crypto?
Well, I spent a lot of Bitcoin at the pub as well, just like Joe, and I also gave a lot of them away. But I also use, whenever I'm buying a service online, for example, VPN services, and there's an option to pay with crypto, I always take that option. I think it's better to use your Bitcoin or your crypto address than your credit card and put their information out there. Like, credit cards were not built for the web. It's just, an in-between technology before we all get into the crypto world, in my opinion. And yeah, I think that's the most important one. I also buy a lot of things with my normal credit card, and then I pay my credit card bill with crypto, which technically means I just live off of crypto.
Awesome. All right. So I guess let's bring this conversation to like a way in which people understand, how does the transaction look like? So let's say, for example, if we were at the pub, or if you're paying for goods and services online, what does that actually look like? How do you actually send the money?
How I did it was scanning a QR code. So you just walk in, scan the QR code, hit the amount, hit send, and the transaction would go through effectively straight away.
It's very similar. Even when you're paying for something on a website, there's usually a QR code where you scan your wallet with, and processes in seconds. It's very similar to what you do with normal Apple Pay wallet.
Yeah.
Yeah.
Go for it.
There are kind of like there are two options really, and it comes down to the merchant. Either the first option is, of course, you have one of these really unique and amazing crypto credit cards, which you can upload with your crypto and then pay fiat to the merchant. And then, of course, the opposite end of that equation is the merchant is actually happy to accept cryptocurrency. So that was really the first stage, and the examples that Adriana and Joe mentioned were merchants who were willing to accept the Bitcoin or the whatever crypto as payment. But now, more recently, we've got sort of Visa and MasterCard and these larger credit card companies partnering with other fintechs and crypto companies in order to allow for that sort of resistance to change, right? And the merchant no longer has to accept the crypto as payment and deal with it. Rather, they just accept the fiat, but they give the consumer the option. So there are kind of two ways, and I have myself, to answer the first question, done both. I paid most of my bills maybe 3 years ago with crypto because most of my assets were held in crypto. So it was far easier for me to choose that option. So yeah, that's it.
All right, fantastic. And also, I'm not sure if many of you are aware, but there are services that are coming out where you can actually connect your crypto to like a Visa card. So you quite simply buy the crypto of choice, whether it's Bitcoin, Ethereum, or something else, and the value in Aussie dollars or other dollars, that's what's basically linked to your Visa debit card. And in other words, it makes it even simpler for you to purchase goods and services with your crypto through traditional means.
Do Independent Reserve have that on the roadmap to bring out their own card? Yeah.
It is one of the things we've been looking at, and we have been talking to a few of the card providers like MasterCard about this, and it is on our roadmap. But I was actually going to say something that may be a little bit controversial on this panel. In my mind, right now in Australia at least, the payment rails are actually pretty highly evolved. It's pretty easy to make a payment with my watch, with my Visa card, with my phone. It's actually a bit of a hard sell, even though I've been in crypto for, I don't know, 8 or 9 years or more. It's actually a hard sell for anyone to convince me that it's easier for me to buy a beer using Bitcoin rather than just using my watch, because it's just so convenient and it works really well. So to me, where crypto really shines is in international remittance. I don't know if anyone here has ever tried to make a SWIFT transfer. It's an incredible pain in the ass. And you basically just hope and pray that it reaches the other side, and you hope it gets there within a week. So I can actually give you guys a recent example. This is a real-life example. We have a team of developers in Kyrgyzstan. Now, Kyrgyzstan is a country to which we don't have anything against Kyrgyzstan. We don't have any sanctions. The banking rail should just work, right? And we pay our team every month. We pay them, I don't know, I think the last invoice was about $60,000. So it's a reasonable amount of money. And it just so happened that the correspondent bank, because to pay anyone overseas, I don't know if everyone here knows, your money actually hops around a whole bunch of banks in a whole bunch of different countries without you knowing this. One of the correspondent banks in the transfer was a bank in Russia. And it just so happened that as the money was traveling to Kyrgyzstan, a country to which there are no restrictions, the sanctions to Russia kicked in. And our money is now stuck in a bank in Russia, and we'll probably never see it again, right? I wish we had paid these guys in Bitcoin. This is the real use case in Bitcoin, because international rails are really inefficient, and this is a thing that crypto really solves so well. The fact that you know your money's going to get there, is going to get there instantly. People won't have to wait a week, and it's just reliable and fast and easy. This is a great use case for crypto right now.
Amazing. Thank you for that story. All right, so you can spend crypto. There are still a number of places in Sydney and across Australia where you can actually go to the bar and still pay for beers and food, etc. I had a Google just before I arrived there how many places in Australia take Bitcoin, and there's about hundreds of different places that actually do it. So if you wanted to do it, the option is available to you. Now, if you wanted to get into crypto, you'd actually need to get some crypto. So the question is, how do you get the crypto? Another question, it's going to be a real stumper, this one. Has anybody ever gone on a holiday overseas? Anybody? A few of you? All right, excellent. And chances are when you went on a holiday overseas, you might have had to get some cash of that country, right? So you might have popped into one of those kiosks on George Street where they can exchange your Aussie dollars to wherever you're going to. Or maybe you got one of those bank cards where they can load it up with the currency of your destination. Now, this is something we're all pretty used to. And if you were to think of cryptocurrencies as just another foreign currency, then I'd imagine the process actually might make sense to you. So, Adrian, going back to you, you run an exchange. How hard is it, or easy is it, for people to buy and sell cryptocurrencies?
I think it's pretty easy. I think on average it takes about 10 minutes to open up an account, and then you can make an instant AUD deposit using our highly evolved payment rails. So you can pretty much be up and running and trading within a few minutes, really. So it's a pretty easy thing to do.
All right, and when people open up an account with crypto exchanges, all the crypto exchanges in Australia, they have to follow certain government procedures. They're known as like AML or CTF rules. It's like anti-money laundering, counter-terrorism financing rules. So you have to get some information from the customer, I suppose, right?
Yes, so we are actually kind of regulated here in Australia, and we're regulated by AUSTRAC, who's the regulator that basically makes sure that we don't send money to any kind of bad people overseas. So what that requires us to do is we need to make sure that we know who our customers are, and that requires us to ask for a few pieces of information from our customers when they open up an account. It's not too different to opening up an account at a bank.
All right, so if you guys ever open up a bank account, that's what it's like opening up an account at Independent Reserve and other crypto exchanges. So we've covered why people need to provide it. That's because the government tells you so. The next question, I guess, is how do people protect their crypto?
So I guess the early promise of crypto is that anyone can be their own bank, right? And it's an interesting thought, and it's a thought that people initially really jump at because, you know, we don't like the banks. It's great to be your own bank, right? And then it turns out that when you try, it's actually pretty difficult. It's actually pretty difficult to store your crypto in a secure way. It's pretty difficult to store your crypto in a way that not only is it secure, but it's backed up in case your house burns down. And also, what happens when you die? Would your wife know how to access it, right? There's all these questions that we don't normally have to ask ourselves because we store money in a bank, we store shares at on the ASX, and it all kind of works. There are lawyers, there are things in place to make sure that, you know, you don't get robbed, and that, you know, if you die, your kids are able to get your assets. With crypto, all the onus is on you, right? So there are obviously things that you can do if you want to store your crypto yourself, but a lot of people to choose to kind of, they entrust this responsibility to others like exchanges. They basically trust others to hold the assets on their behalf, and that tends to be the easier way to do it.
All right.
The only question I've got around that is insurance. So for me, it's all well and good leaving it in the responsibility of someone else who's got more of an idea and understanding than what a newer person would in crypto. But the big thing for me is every exchange should have some form of insurance. And I understand that you guys do, I believe, and you maybe have to pay for that, right? Maybe you can explain more about that.
Yeah, absolutely. So I guess insurance is an interesting thing in crypto. It's actually quite a new product in crypto. It's only been around for a few years. Insurance underwriters are only just becoming comfortable with insuring cryptocurrencies. So about 3 or 4 years ago, we were able to offer an insurance product, and I think we were one of I think we're the third exchange worldwide to actually be able to offer this. Yeah, so I guess, yeah, that's one other way that you can help to ensure that your crypto remains safe, even if the exchange that you do trust has an incident.
All right, excellent. So we've covered a number of topics. Can we spend crypto? Yes, we can. If you're going to El Salvador, load up on that biddy. We know where to get it from, IR. And the next thing is, what if we want to get paid in Bitcoin, right? So money, it has a lot of different uses for it. And one of the things we might want to do is actually get paid for our time and services with crypto. All right, who
The
here,
best way.
who here gets paid in crypto or has been paid in crypto? All right, we've got 4 panelists. Mali, we might bring it over to you. So tell us a little bit about how you get paid in crypto.
Hi, so yeah, I'm an artist and also co-founder of an NFT project. And for anyone who doesn't or hasn't traded in NFTs before, there is an inbuilt royalty system in buying, selling, and owning an NFT. An NFT being a digital asset, a JPEG, a piece of artwork, as some would call it. And that is built into the code, into the maths. Once this NFT is used to be traded or sold or valued in any way, there's the royalty system gives me or anybody an automatic payment. So
All right,
yeah.
amazing. So people buy your artwork.
Yes.
There's a transaction. So, for example, you don't have to sell. So let's say, for example, you sold an NFT to Adrian. Adrian then sells it on for a profit. Do you still make money from that NFT?
I do, yes.
All right, amazing. All right, so you've sold the NFT. The money comes in. How does that look like for you? Do you transfer it into Australian dollars? How do you pay the bills for it? What does that look like for you?
At the moment, it's a bit of a mixed case. I get it as soon as it happens, which is the first time in history that something visual is credited back to an artist so fast. It lands in my crypto wallet, and if I need to pay a bill, I will use an exchange to take that out and transfer it into fiat. If I find a way to use straight cryptocurrency to pay for anything of my day-to-day, I will just use crypto. A good example is I bought clothes off a girl the other day, and I directly transferred it to her crypto wallet.
Nice.
In Ethereum, paying
So
a little
good.
bit of gas, but yeah.
If any of you guys got close to sell and only accept crypto,
Come see Miley.
I'm all
I've got a
about-
buyer for you right here. All right,
We're
Adriana, you get paid in crypto.
Yes,
Tell us how that looks
I
like.
do. I'm surprised that your devs are not paid in crypto. I guess we need to have a chat to them. I do. I work with the Algorand Foundation, as you've heard, and they pay me in algos, which is the Algorand cryptocurrency. And I prefer to save that because, prefer to save it in crypto than in fiat. Lots of inflation happening at the moment. Governments are printing money like literally there's no tomorrow. Maybe that's what the expectation was during COVID. But anyway, so sometimes I spend too much on my credit cards and then I use algos to pay for my credit card bill, as I mentioned before.
All right, amazing. Now, where I want to go to next is like a little derivative of money, right? I don't know if you remember this. Maybe some of you had like a Dolomite account with CBA, and they used to pay you this thing called interest. Do you remember this thing called interest that they used to pay you? I've not heard of it lately. I'm not sure if it still exists as a concept in the banking world, but it is still a concept in the crypto world. So just to kind of give you a little bit of background about it, there's a term called staking, which is essentially locking your money up in something like a crypto savings account or a crypto term deposit. And for that, you actually get this thing you've long forgot about called interest. Have any of you ever locked their money away up for, all right, Joe and Mitch? Joe, tell us, how does it work? What's it all about?
So there's many different ways that you can do staking or locking your funds up, lending. You can do it through exchanges now. I don't recommend that way because it means leaving your crypto on the exchange. And I know Adrian said earlier, people entrust the exchanges. I don't trust anyone with my money.
Smart move.
Yeah, I think it's the best way personally.
We trust Adrian, but it's still a smart move.
So you can do it through exchanges, which is a built-in feature that a lot of them have now, which I think is really good because it makes it easy for people that want to use it that way. We've got a partnership with Celsius, who are seen as the number one in terms of what they have locked up as 25 billion. What I like in particular about them is they will insure each account up to 350K US. What you can do is you can open multiple accounts in trust, company, personal names, so you can spread millions of dollars across multiple accounts, which I would recommend if you do that. The strategy that I have for our elite clients, which are $1 million plus clients, is I want to get them all to a level where they can have enough money that they put a section of that into a stable coin like USDC, lend it out on a platform, get 7%. Some of them, like Anchor, give up to 20% on a stable coin, and they can live their entire lives off of that, just the interest. So
amazing. So
yeah,
they're getting
cool.
10 to 20% interest per annum on a stable coin. Now, for everyone playing at home and in the audience, a stable coin is basically a digital currency or cryptocurrency that is linked to the value of something like the US dollar or the Australian dollar. And so if you're not getting 10 to 20% on your money in CBA, then I guess you can put it into one of these pools and earn a lot more. I guess what I want to do is just bring it back in a way that's kind of relatable to everybody and what that actually looks like. So we first need some crypto. So we go to IR and we go, all right, Aussie dollars to some crypto. We've got this crypto. Where do you send it to? Do you have like a plugin on a website? Do you have some sort of magical wallet that you send it to? What does that whole look like so everybody can kind of relate to it in everyday terms?
I'll keep this as high level as I can, but I feel like this part's needed to be explained. So with DeFi, decentralized finance, they're the platforms that you use to lend out your money. There's CeFi, which is centralized, meaning a company owns and operates that. Celsius is a CeFi platform, meaning you send your money through to them. So you go through, similar to setting up an exchange, you will go through, set up, give them the credentials, whatever you need. If you're high net wealth, there is more work to be done, or if you're setting up a trust. They require the documents, and then from there you can transfer ownership effectively of crypto from you to them, and they will hold it in their vaults in however they store it. And that's one way that you can do it. DeFi platforms are slightly different, where it's kind of governed through the network rather than a centralized function. They do offer better rates, but there's a lot of challenges, you might say, which I won't get into the finer details, but you can have bugs with encoding and stuff, which could be a challenge. So it's either you transfer ownership, or DeFi, you still hold ownership, which I think is probably a better way to be doing it, if I'm honest.
Awesome. Thank you, Joe. Mitch?
I think what I want to say about DeFi and yield farming is, I think with the crypto space and its development over the last 4 years, it's one of the first times that there's been a clear indication that institutions can actually add cryptocurrency to their balance sheet and as a treasury play in order to earn yield. Like, this is pretty fundamental, and that's wasn't available other than through centralized institutions up until maybe a few years ago, which has actually, like, in the, sort of the startup that I founded, Oz Merchant, was a really interesting incentive to speak to merchants about, because what we help them do is accept cryptocurrency as payment for sort of high value goods, and then of course do the distribution in fiat money. However, we needed to find a way in order to maintain competitive advantage for them to hold on to the crypto, right? Because if they hold on to the crypto, the money is staying in our liquidity network, and that is a benefit for the company. Yield is the most ideal incentive for that. So if we can offer these merchants the ability to hold those stable coins, say, $500,000 worth of stable coins, they earn 5% yield, they're going to slowly over time choose to hold on to that cryptocurrency they receive as payment, put it into these yield farms, and accumulate assets over time in yield and in interest, indifferent to the current banking system, as we've been joking about. So I think that that's one of the most interesting aspects of DeFi to me, is that it does break down a lot of the traditional barriers that people had with cryptocurrency. They thought, no, it's just holding on to Bitcoin as a speculative asset, but now it is actually becoming a productive asset, which is pretty fundamental.
Thank you, Mitch. I'm not sure if everybody got that there, but Mitch dropped a little golden nugget, and that is, if any of you are business owners and you have money in the bank account, say you're having a very fantastic year, and you've got all this Aussie dollars, USD dollars sitting in your bank account, you can essentially, as a business, put it into crypto and start getting a return on it. So if any of you guys run businesses in the audience, maybe consider dropping some of that into crypto and getting a return. Mali.
Is that something that Oz Merchant also manages?
Yeah, so that would be, it's a CeFi solution, similar to Celsius. But the idea behind it is that the advantage of being sort of a centralized player in a decentralized environment is you can sort of network and pick the best parts of all of the decentralized world. So you could get some of your yield from Aave, you could get some of your yield from Celsius, you could get some of your yield from another decentralized platform, aggregate that, and then provide the yield to the client at the end of the day, the merchant. So,
all right, for all of you playing at home, if that was Chinese to you, essentially what they said is there's multiple blockchains and they all kind of offer different interest rates, different rewards, different risks, and you can kind of take your money off of, put it into there, and they'll give you different rewards for that. All right, thank you, everybody. Let's do a little time check. All right, we're going good. The next thing, we're going to keep on going on with the stream about investing. Self-managed super funds. Now, if you have not heard of self-managed super funds, if you have a job in Australia, chances are you have something known as a superannuation, which is government mandated. And about 9 or 10% of your salary goes towards this superannuation fund in order to build up for your retirement. Now, some people choose to take that into their own hands through something called a self-managed super fund. Let's see a show of hands if you deal with self-managed super funds here. All right, we've got a handful. We might start off with Adriana. I believe you have a self-managed super fund.
I do, because I really like Bitcoin. So, yes,
Bitcoin is the king.
Great. It is the king and the queen of crypto. Yes.
The whole family.
Yes, the whole family. So back in 2018, which was late, I've been in crypto since 2014 or thereabouts. And then in 2018, I decided to get off my butt and do a self-managed super, because on year to year, Bitcoin has been growing exponentially. And I personally have a problem with the, traditional markets and the way that super funds invest in traditional stocks, and sometimes they're not good. So I wanted to take the power into my own hands and put Bitcoin in there. At the time, there were no exchanges offering a superannuation product, so I had to take yes, at the time. I had to take that into my own hands, and I do have to manage all of that with a digital, with a hardware wallet, which, as Adrian was saying, can be a little bit involved. But I have experience. There's not a problem. Nowadays, there's a much better option. But yes, you can do it. And I remember at the time, the ATO gave me a call and asked me, do you know what you're doing? Putting Bitcoin in your superannuation. And I said, yes. I've ran 100 meetups about it. I know what Bitcoin can do, and I would recommend it to you if you haven't tried.
All right. Let's say, for example, the people in the audience or people playing at home on YouTube, don't know how to start a self-managed super fund, or it sounds really like super duper complex. What's the process of creating it? Are there like agencies that help you set up the SMSF? how much does it cost per year?
Yes, there are. Yes, there are companies that help you. I used a company called Sequoia. Hi, Sam. They are really good, but your accountant, I think, can do that for you as well. You don't have to go with any specific companies. And nowadays, you can also, when setting up your super, you don't have to go down the route that I did, and you can use a crypto exchange to manage that for you as well, which is much easier.
And how much does it cost to manage a self-managed super fund a year?
Oh, it depends. The company that I work with, it's about $1,200 a year, which it covers the expenses of the reporting and the audits and all of that. So it's really worthwhile, in my opinion.
All right, so we were talking about SMSFs and Independent Reserve. They allow you to create SMSF accounts. Now, as I understand it, you can't simply use your personal account to invest in SMSF. So if you have a private wallet and you also decide to create your own self-managed super fund, there needs to be segregated funds, right? So can you tell us a little bit about the process of creating like a self-managed super fund and why you need to segregate it?
Yeah, that's right. So I actually think we were the first exchange in Australia to allow SMSF accounts. I remember back in, I think it was like 2016, 15 maybe, there was a guy at meetups that kept telling me about SMSFs, and I honestly did not know what an SMSF was. And I kept telling him, yep, we'll definitely do this. And he just kept coming back, and he kept coming back. And then I finally looked it up, and I thought, okay, that's actually a pretty good idea. So you can manage your retirement money in the way that you want, rather than trust your super fund, to put your money into some US bonds, yielding 1%. You can actually take action. You can be in control and invest your money in the way that you like. And it makes complete sense to invest that money into crypto because it's a really good asset class, and it's been the best performing asset class over the last 9 or 10 years. Or whatever the number is, which I'm sure you know, Joe.
The worst performing year that Bitcoin has had year on year is 9.6%.
Exactly. So it's been pretty good, right? So it makes complete sense why you'd want to keep your super in crypto. So we did a lot of research. Okay, what's involved with having an SMSF account? And it's actually not that difficult. So if you have an SMSF, what you have is a trust deed. This is something that your accountant will probably be able to organize for you. And this trust deed basically says that you hold this money in trust for yourself when you're old enough to retire, and you have to keep your retirement money in a separate pool to your everyday money. Otherwise, the ATO gets really upset and you probably go to jail. So this is why it's very important to keep these things separate, because you don't want to go to jail. So when you open up an account in Independent Reserve as an SMSF, we'll ask you a few extra questions. We'll ask you to upload a few extra documents. But if you have an SMSF already in place, all these things will be very easy to do.
All right, amazing. Thank you very much. And also, I read through your last year's Independent Reserve Cryptocurrency Index survey, and you asked SMSF trustees if they were likely or not likely to invest into cryptocurrencies. And allegedly, 38% of SMSFs indicated that they were likely or very likely to invest into cryptocurrencies. Moreover, according to the Independent Reserve data, in 2019, so just 3 years ago, there was $77 million worth of crypto assets bought on Independent Reserve, and in 2021, $500 million was traded by SMSFs.
Look, I think that makes complete sense, because when you think about it, the people that want to run an SMSF tend to be the people that think outside the box. They're not really satisfied by what they get from the traditional players. They're unhappy. They want to do things themselves, and that tends to correlate very well with the people that get into crypto. They're not happy with the status quo. They want to try the new thing. They want to really take control. So it makes complete. It's obvious that there's a high correlation between people with SMSFs and people that like investing in crypto. It makes complete sense.
Oh, may I add something to that? The year that I bought Bitcoin for my SMSF, I paid, I don't know, around 15,000 AUD for that. The year after, it crashed to 6. And I was a little bit nervous, any normal person would have been. But when you have like the long-term horizon of retirement, which is all the way down the road, it really didn't make a difference. I'm up like 4 times now. And it really, I think, having come to Australia later in life and not having that long to go, I think that's going to make a difference in how I retire.
And I think
I think you know in your retirement, Adriana.
that's an interesting point on time horizons as well for SMSFs. Like one of the reasons that people get stopped before creating an SMSF is that like $1,500. I've only been earning money for 5 years of my life. My SMSF is maybe $20,000. That's like a solid 5% of my total portfolio I'm paying on fees. Well, when you think about cryptocurrency and the time horizon that you're talking about, for a person who has only been earning money for 5 years, we're talking about another 30, 40 years that they're going to be holding crypto. So if your thesis and if you're here, you believe crypto is here to stay. So I think that is like a bit of a myth that we can debunk here, that creating an SMSF has a particular threshold of money that you need in your account.
Amazing. We've now been going on for close to 45 minutes. So I want to cover 2 more topics, actually 3 more topics, sorry. We'll just power through this. So we've talked about using crypto as money. We've talked about how to get it. We've talked about how to spend it and some of the places that you can place it. The next thing I want to do is talk about people who actually think of cryptocurrencies as an investment. So, Joe, you're the expert in investing into crypto. My first question for you is, what do your clients look like? Actually, maybe better, not what they look like, but what do you recommend for them to do? Buy low, sell high, hold it for a long time? What are a few basic principles of investing in crypto?
So everything comes down to risk. Everyone has a different risk appetite, therefore they have different strategies. So there's no one strategy that fits everyone. It's impossible. I certainly advise people to stay away from day trading. The reason is you're competing against bots now. You're no longer competing against humans. So you're on a very different playing field and on very small time frames. It makes it a lot more challenging. I think scaling in and out of an investment is very important. So instead of saying I've got 10 grand, I want to buy Bitcoin, I'm going to chuck it all in, you want to layer in and find key areas and conditions.
Is that dollar cost averaging or?
Well, that's a strategy. So dollar cost averaging just means that you set an auto buy every single week at a certain price and you can buy it throughout time, and over a long time frame you can see that consistently year on year we've gone up in value. So dollar cost averaging is a strategy. There's more advanced strategies that you can use. I personally don't believe in buying and holding because I've seen the volatility of the market for nearly 8 years now, and I understand what volatility looks like. Therefore, I shouldn't be sitting and holding knowing that it's going to go up and then it's going to come down. So I was looking for overvalued points and undervalued points. And like any market, it swings from overvalued to undervalued. It very rarely will it stay in parity of true valuation. So yeah, you need to have different strategies for different things, but it's really down to conditions. On this condition that gets met, then I will execute this trade, this investment, rather than just saying I've got money, I'm going to chuck it in, or the market looks like it's turning. You will get what you put in, quite simply. If you want to be a professional athlete, you put the hours in, that's the outcome you get. If you want to be an incredible investor and you put the time in, that's the result you're going to get. So,
all right.
Invest in art.
Invest in art. And that, speaking of art is the next thing that I want to talk about. Everybody, let's see a hand. If you know how to draw something, like maybe squiggle a little bit. Anybody ever squiggled a line drawing? Well, you know, our mate Picasso, he was all about the squiggles. And his stuff is worth like a lot of money. Luckily for us, we have Marley here. And Marley is a digital artist. her art, along with the collaboration she does at Toy Factory, has sold over $250,000 worth of art. Now, for many of you, you might know it as NFTs, which stand for non-fungible tokens. What the hell does that mean? I don't know. We're just going to refer to it as digital art or something to that effect. All right, so I've got some questions here. Let me just figure out where I'm at. For an artist getting started, what does the journey into NFTs or digital art look like?
Yeah, absolutely. I guess like first of all, touching on the whole topic of like jargon or like difficult words, like, you know, we are at a stage of everybody understanding crypto, everybody understanding blockchain, and it's not terms that are going to go away. And to like learn really basic understanding is the first step. It's to learn the vernacular and the vocabulary and what we're dealing with right now. So yeah, to enter into using non-fungible tokens, that is a unique artwork or a unique thing, is to, I think, so many entrances, OpenSea being one of them. Is that what you were asking, where to go to buy one?
I guess there's many parts to this. Like there's the art side of being an artist, and there's also being the collector side, right?
Okay.
So we'll talk about the collection side in a moment.
Okay.
But I'd imagine whether they're playing at home or in the audience, there's a few creative people here. You know, there's squiggles on pieces of paper that they can scan.
Yeah.
They can upload that and turn it into an NFT. So for an artist getting started, we've talked about actually what do you need to get started? Like what are the three tools that you need as an artist to post an NFT?
I think the three tools that you need are an idea, that is your artwork. You need an audience, like someone to talk to about your art, or to know where to talk about your art, and then also like a way to create your NFT, that is. So in answer to that, you need an artwork that is your own design. You need, where are you going to post it? Are you going to talk to your Instagram about it? Are you going to talk to your Twitter followers about it? Are you going to talk to your real life artwork collectors about it? Are you going to talk to your friends? And then how are you going to create it, and how are you going to use the blockchain as a way to capture your artwork? And that is a broader question.
Let's maybe bring it back to more to basics for everyone in the audience and playing at home. Maybe you have a creative bone. Maybe your missus or your husband has a creative bone, and they're like, look at this, I've created this amazing piece of art, and they want to like go sell it. They're like, this is the best Mr. Squiggler I've ever created in my life. People need to know about this. So do they need like a plugin? Do they need some crypto in their crypto wallet? What do they need?
Okay, I think one of the easiest ways to enter into that is to have a way, digitize your artwork. So take a photo of your squiggle. Again, OpenSea is like the eBay of NFTs, of art. So going to OpenSea, you need a cryptocurrency wallet. So you need a way to communicate, you need a way to upload and to sign into OpenSea.
And do you use MetaMask, or what's your preferred wallet?
I prefer MetaMask personally.
MetaMask?
Does anyone else have any opinions on that?
I use MetaMask and OpenSea as well, but I also use the Para wallet to do it on Rent Gallery on Algorand.
All right.
I had to.
NFTs on Algorand.
Yes, I mean,
And what's the gallery called?
Rent Gallery.
Rent Gallery. So if you're an Algorand supporter, get onto Rent Gallery and get yourself some NFTs. All right, we're now approaching the hour mark, so I do want to maybe touch on a couple of more points. One thing that everybody loves is games. You know, whether we're playing hopscotch in the playground, or a bit of handball, or these days it might be on the PlayStation 5, slashing and killing, we all love a bit of gaming. And believe it or not, you can actually do gaming on the blockchain.
Yeah,
Mitch, tell us about gaming on the blockchain. What does it look like? Does it cost you much to get into it?
Yeah, it's an interesting trend that actually at Blockchain Week we've sort of had far more news and noise about GameFi. And I guess the most interesting thing about GameFi is that it's actually providing value back to the people who play the game. So the common meme is play to earn. And realistically, like the beautiful thing about that is, I'm not sure how many of you in the crowd are gamers here.
Have we got any gamers in the house?
Yeah.
If you've played Tetris, raise your hands.
Surely we've got a few gamers
A
around.
few Tetris players in there? All right.
Yeah, so I was a bit of a World of Warcraft nerd for a lot of my adolescent life, and one of the things that I always found frustrating is when I decided to stop playing for 6 months, all of my value was locked into the game. I put so many hours into this, I developed a character, I developed reputation, I developed sort of assets and value, but they were completely sort of isolated to the game. And I guess that's the biggest value proposition that GameFi has, is that if you want to pack up and leave, all of the value that you created during that time is suddenly liquid because it's in a cryptocurrency. It's in a game of which you can then dispose of that cryptocurrency or that token, buy Ethereum, and then buy an NFT from Toy Factory instead because you've decided to exit the game.
All right.
So that's really interesting. And then just in terms of how it works, GameFi in using cryptocurrency and blockchain sort of pulls from a whole bunch of different aspects of crypto. So some games use yield farming as one of their incentives.
That might be Chinese to some people. Like
Some games use NFTs.
Let's say, for example, we have World of Warcraft. I'm not
Okay.
sure if any of you have played it, but there might be activities like chopping wood or, killing monsters. Do you have... How good's killing monsters? Yeah! So good. Do you do that in...
Yes, you do. And the cool thing about when you do that is that it's permanently recorded on an immutable blockchain. So the history of your character is genuine and auditable over time. So that reputation sort of lives with your wallet as you go to different games or whatsoever. So there is interoperability, yeah.
Something I might just add on the back of this. So one of the guys in my team, Andy, he was into Axie Infinity very, very early stages. He's got 100 scholars, or probably more than that now, people working for him in the Philippines playing Axie Infinity. When it first came out, it was incredibly lucrative for him and everyone in the Philippines because they get paid in something called SLP, which is a token through the game. That was at 40 cents. It's now at 1 cent. So I think whilst it's new and it's evolving, I think there's a lot of work to be done in the play to earn space. And it's incredible if you were like all the input that people have into Call of Duty and all these, I'll be careful with my words, but I call them pointless games because I don't play them personally or find them of interest. No offense, Mitch. But at least people can actually create something from it now. So I can see the movement, but I think the space has still got a long way to go.
You've got too many kids. You're not playing enough games.
All right, we're going to be wrapping up the event shortly. What we might do is take 3 questions from the audience. So if anybody's got a question, raise your hand for our panelists. All right, we've got one at the back over there. Chris, can you help? Awesome, thank you, brother. And definitely the IR customer is going to get a chance as well. Such an amazing fan.
Is there a movement in the market, is there a movement in the industry where the exchanges are going to come together and they're going to form a standard API interfaces across? It would help create a sophisticated ecosystem of third-party applications.
Who chooses the API?
We choose the API which is available to us from the vendors.
Yeah, so I think the problem with a decentralized system where there are many exchanges doing their own thing, we'll never agree on an API. Unless maybe at some point we get together like the financial institutions did, I guess at some point in the 90s when they created FIX, and you got the FIX standard, and then you got FIX 1.1, 1.2, or whatever it is now. That's probably quite a while away, although quite a few exchanges do implement FIX, including us, but probably not for what you're trying to do, because you're looking at historical transactions as opposed to the trades that are happening.
Yeah, and also
which is what Fix is made for.
Yeah,
So it's probably not going to happen anytime soon. I'm sorry. It's because there's a whole bunch of exchanges being run by a whole bunch of different people with a whole bunch of different developers doing their own thing and thinking that their thing's the best.
So we're going to wait for a while for those now.
Yeah, keep waiting.
Yeah, look,
That's bad.
when the internet started, there wasn't no standards, and
There
then people
was.
were trying. When it started,
Yeah.
there were no standards, and people tried to do this, like have different protocols that did different things, and it wasn't until a standard was agreed upon a whole bunch of different parties that the internet really took off. So I think we are still at that point before the standards comes along, and this is like in the horizon, but we're not there yet.
Yeah, that's the question, that are we seeing the point coming along?
At some point, it will coalesce, but we're probably not quite there yet.
Okay, thanks for that.
All right, have we got another question? Where's Independent Reserve's greatest fan? All right, maybe head it off. All right. I guess everybody just wants to get back on the juice. I'm not going to hold you up any longer, but before we go, please give a big round of applause for our audience tonight, for our panelists tonight.
This was fun. Thanks very much for coming, everybody.
All right, thank you, everyone.